Welcome to the Deep Dive. Today we're going to unpack the latest market digest from Lotusbee Wealth. This is for July 3rd, 2025. We really want to get into what drove the markets, this powerful risk-on rally they mentioned,
Yeah,
but also what does it mean for you and maybe what signals to watch next.
exactly. And this is great because it helps you get a quick, insightful handle on the landscape. We're not just hitting the what, but really digging into the why behind these market moves.
Okay, let's unpack this then, starting with the big indexes. The S&P 500 closed at 625.34. That's up 0.80%. And get this, its third all-time high just this week.
Wow. Yeah.
The Dow Jones also surged around 344 points, so up 0.76%. And the NASDAQ 100 actually led the pack, gaining 0.98%. Really seemed like semis and tech pulling that one.
Definitely.
Even the Russell 2000, the small caps, saw a decent boost, 0.90%. So pretty broad optimism.
Yeah, and what's fascinating here is how these gains really link back directly to that strong jobs data that I just mentioned. See, strong economic numbers like that, they tend to fuel confidence. Investors feel, well, maybe the Fed doesn't need to step in so quickly, so they shift towards growth, towards risk. That's your classic risk-on sentiment right there.
Right.
And interestingly, the VIX, the volatility index, stayed pretty moderate, around 16.8. That suggests, even with these big moves, there wasn't a lot of underlying fear, more like confidence.
Okay, but drilling down, here's where it gets really interesting, I think. Specific S&P 500 movers. First, solar, FSLR, it shot up 8.5%. The source points to a clean energy tax tailwind.
That jump.
And then you had chip design firms, Cadence CDNS up 5.1%, and Synopsys S&PS up 4.9%,
Right.
apparently benefiting from eased China export restrictions and just general momentum in semiconductor software.
And if we connect that to the bigger picture, it's a perfect example, really. You see how specific policies like tax breaks or geopolitical shifts like those China export rules, they have a direct, tangible impact on specific companies, specific sectors. It creates these little pockets of strength, these sector rallies, even when the whole market is up.
Yeah, that makes sense. But here's the contrast. Home builders. Lanner, LAN, was down 4.5%, and D.R. Horton, DHI, down 2.7%. The source mentions weakness after jobs data. That seems a bit counterintuitive, doesn't it? Strong jobs should be good for housing.
It does seem like a paradox, right? But this raises an important point about market interpretation. While strong jobs are good overall, sometimes the market reads that as, okay, the Fed might keep rates higher for longer now to fight potential inflation. And for home builders, higher rates mean higher mortgage costs. That hits affordability, hits demand. So yeah, you can see weakness in that sector even with good economic news.
Okay. That nuance is key. All right, shifting gears a bit. What about other assets? Crypto, Bitcoin hit 110,334% at the ticket market, up 2.4%. And the driver, massive ETF inflows, like $50 billion, huge numbers.
Yes, staggering numbers, yeah.
Ethereum also surged 7.2%, apparently on DeFi optimism. And again, ETF activity, XRP was up too.
And those ETF inflows, we really have to emphasize that. That's significant. It's institutional money flowing in through these, easy-to-access vehicles. It adds massive liquidity, yes, but it also sort of legitimizes crypto for a much wider audience. It's a big deal.
Definitely feels like a factor. And quickly on precious metals, gold was pretty steady, around $3,327 an ounce. Silver ticked up slightly, 0.2% to about $36.78. Seems like traders are just waiting for more payroll data there.
Yeah, precious metals often act as that barometer for uncertainty, So the fact they held firm, even with the big market rally, during what the source called the calm before the Fed's next move, it suggests some investors are still hedging their bets a little, still cautious about what might come next, maybe inflation or volatility, even while others pile into riskier assets.
Okay, so boiling it all down,
Yeah.
what does this all mean? The big theme for July 3rd was clearly this broad risk-on rally, fueled by strong jobs data, pushed indexes up, drove tech and small caps, and wow, crypto surged on those ETF flows.
Exactly. And looking ahead, those next moves from Lotusbee Wealth are spot on. You absolutely need to watch the upcoming July NFP jobs report and the PMI data, crucial signals. Also, will those crypto ETF flows keep up that pace? That's a big question. And how does the housing sector react to any new hints about interest rates? Any of those could definitely shift the tone again.
Great summary. Well, thank you for joining us on this deep dive into the July 3rd markets.
Yeah, thanks for listening. And maybe something to think about. How does the market react so quickly, sometimes almost contradictorily, to just one piece of data, like those jobs numbers? You see home builders dip while tech soars, crypto surges. It all happens at once. What does that immediate, complex ripple effect tell you about just how interconnected everything is in our global economy today? Something to chew on.